one of the first examples I used was the Patels who came to the U.S. in the 70s as refugees because they were being evicted from East Africa, Uganda, etc. And in fact, what has happened in the last 12 years since I wrote the book is the Patels have continued. So when I wrote the book, they had about, kind of 40 to 50% market share. Basically, all the motels in the US, approximately if half of them were under Patel ownership about a dozen years ago. That number is probably approaching north of 70 or 75% today. And the second thing that has happened is the Patels have moved up market. So what used to be them just being in the kind of low end motels, they've gone into the Marriotts and the Hyatts and the Hiltons, and they've done a masterful job because in all the cases, whether it's a motel or any of these other types of hotels, their kind of comparative advantage has always been uh, lowest cost operator, and low cost is going to give you an edge in pretty much any business you go into, and it's very very difficult for non-Patels to compete with Patels on cost. I think it'll be, it needs to be in your DNA for several generations to operate like that. So, which is why they keep gobbling up more and uh, more share. So the Patels had a very specific approach to when they got into the motel business, which is that they were not interested in taking risks. So they didn't have very much money because a lot of their assets were confiscated by the state. They came with a few $1,000s, and and buying a small motel did a few things for a family. One is it gave them a kind of almost a free place to stay because they would take a couple of rooms and the family would stay there. The second is it would give employment to almost the entire family because hotels are labor intensive with uh, room service and maid service and all of that. And the third was that they could lever their investment. Bank would loan them maybe 70-80% of the purchase price. Uh, so the combination of those, coupled with their ability to run these places uh, lower than anyone else. So basically, once a Patel took over ownership of a motel in a given area, they would quickly survey who their competitors were and what they were charging, and they would underprice versus all their non-Patel competitors. And the competitors had a difficult time matching the Patels because matching the Patels meant that you would lose money. And so the underpricing basically led to higher occupancy. And even though they were underpricing, they were making just as much money or more than their competitors. So over time, as these motels prospered, they took the kind of capital it was generating and they kept buying more motels and kept handing them over to family members and such. And a very small community. Indians make up, let's say, 1% of U.S. population. The Patels, who are, from a very small part of Gujarat, uh, my guess is probably less than maybe 10% of the Indian population. So you have something like 0.1% of U.S. population controlling 75% of the motels. And anytime you see a phenomenon like that, you should ask yourself kind of what's going on. And so that's kind of big kind of quick intro to the Patels, and of course the book delves a little further into their history and their methods and so on. And but that was the crux, which is that you look at a business, you create a competitive advantage, and then you're off to the races. And in investing, you're trying to do the same thing. you're either trying to buy a stock very cheap so you can, kind of make money when it gets fairly priced, or even better, you're trying to buy a great business which is underpriced, and then that business continues to kind of increase in intrinsic value, and you do very well by holding it.
Mohnish, I'm fascinated by the Patel story. One thing, it seems very much understandable that when you have a family basically living in a hotel and working, that you are going to be the low-cost provider. But it sounds like they've been able, or some of the Patels have been able to scale to multiple units where it can no longer be the family doing all the labor. They actually have to hire labor. How have they still been able to remain the low-cost provider and to kind of ensure that the competitive advantage remains intact when they're basically managing people at some point?
Yeah, so I think the game plan the Patels used was that as they started expanding, they would kind of depute one of their relatives who'd been, let's say, being apprentice or being trained in the mother motel, if you will, and that individual had been kind of well versed in the looking at every minute cost. I mean, what would happen typically in a non-Patel motel is, let's say, for example, you needed repairs to a water heater. They would go about doing things a certain way, but the Patels, I think, would have spent the time to, cultivate the relationships and make sure that they watch their pennies when they're looking at the expenditure. So the key was not for scaling was not that they were employing family. The key was that they were watching the minutia very carefully. So they looked at every expense, kind of zero-based budgeting, if you will. I mean, they looked at every expense and say, okay, is this necessary? Can it be done a different way? Are we optimizing? Kind of what's going on here, and that sort of thing. And so the intense focus on cost was something that came very naturally to them, and it was somewhat unnatural for their competitors to be that intense on costs, and so you get an advantage. I mean, I would say that the analogy doesn't quite work, but maybe it does a little bit. But like, no matter how much most full service agency auto insurance companies try, they're going to have a delta versus Geico in terms of cost because of the direct model, and that delta has actually grown because of the internet and so on. So I think the Patels just keeping their nose to the grindstone, even when they have not had family members working there, and even when they've gone to full service motels. I think they just watch their pennies a lot more carefully than most operators and most businesses.
So it sounds like it's really a mindset that they've kept. And you mentioned zero-based budgeting, which I think is
they just look at every single line item with a fresh set of eyes and say, okay, we're not accepting any kind of old rules of how it was done under previous ownership. I want to look at the range of things, and of course they've had experience running motels, and they've looked at every line item earlier, so they've understood very well how to optimize. So each company, it doesn't matter what industry you're in, but each company has a DNA. So many companies become really good at kind of top line and growth and profits growing that way, and a number of companies focus on the bottom line, and they make their numbers work that way. So the Patels have always taken a much more intense interest in in having a cost advantage, and then they've just used the capital that's coming in, because they also live very frugal lifestyles. So they were able to accumulate capital, and help each other, and then the banks over time became more comfortable lending to them, because they just saw the historic default rates of this particular ethnic group or community was different from uh, Joe Public buying motels and such. So all of that kind of snowballed into more and more of an advantage over time.